As for performance over the past week, large cap Granny had total gains of 5.6% compared to 3.74% for the S&P 500, or relative outperformance of 184 basis points. For GRNJ, the return over the past week was 8.2% compared to 4.9% for the Russell 2500, or 341 basis points of relative performance. And for GRNI, large cap income gained 4.9% compared to 3.74% for the S&P, or 118 basis points of relative performance.
The expanding family of Granny Shot ETFs. This update covers the week of December 1st, and it's packed with insights, from ETF performance and capital flows to macroeconomic catalysts, and Tom's 6 major reasons why he expects a strong stock market rally in December. If you want an expert-level, easy-to-understand walkthrough of Tom Lee's full commentary, you're in exactly the right place. Let's dive in.
Just a reminder, a few weeks ago, we launched the Granny Shot ETF's expanded family, GRNJ for Fundstrat small mid-cap ETFs, and GRNI for Fundstrat's U.S. large cap and income ETF, which generates income using derivatives. For the week ending November 28th, assets under management for GRNY are $3.8 billion, for GRNJ, $84 million, and for GRNI, $23 million. As for performance over the past week, large cap Granny had total gains of 5.6% compared to 3.74% for the S&P 500, or relative outperformance of 184 basis points. For GRNJ, the return over the past week was 8.2% compared to 4.9% for the Russell 2500, or 341 basis points of relative performance. And for GRNI, large cap income gained 4.9% compared to 3.74% for the S&P, or 118 basis points of relative performance. And over the past month, year-to-date, Granny Shots is up 25% compared to 18% for the S&P 500, and that's relative performance of positive 706 basis points. And for GRNJ, since inception, up 6.75% compared to 5.88% for the Russell 2500, or 86 basis points of relative performance. And for GRNI, since inception, positive 2.34% compared to a 2.69% gain for the S&P, or 35 basis points of underperformance. Every month we will give you an update on flows, and flows for the month of November were $367 million for the Granny family, $191 million for Granny Shots, $55 million for GRNJ, and $15 million for GRNI. So let's talk about the macro and 6 reasons why I expect stocks to rally in December. First, the Fed is set to cut rates in December, and I think maybe more importantly, QT, or quantitative tightening, is ending. Now, QT started on April 2nd when the Fed began to taper its balance sheet, and that is ending now more than 3 years later. And as you can see on this chart, the Fed's balance sheet has shrunk dramatically. The last time the Fed ended its quantitative tightening program was in September 2019, and that program lasted about 18 months. But let's look at the S&P 500 during that period of time. When QT ended on September 19th, you can see the S&P up until that point was in a range bound, in fact had a pretty nasty correction, but then quickly gained around 17% over 16 trading days. So it was significant for equities once QT ended. So that's something to keep in mind. Now, as far as the Fed taking action in December, I want to start with the Bank of Japan, because it looks like the odds have shifted for the Bank of Japan to actually hike rates in December. 61% odds according to Polymarket. Now that contrasts with what the Fed's planning to do. Looking at Polymarket, again, market-based odds, an 89% chance the Fed cuts in December. So we're really talking about two central banks pursuing different paths. But again, for U.S. equities, it's really what the Fed's going to do. And finally, with regard to the Fed, President Trump just recently said he knows who he's going to pick as Fed chair and announce it soon. I'm going to guess it's going to come around or slightly after the FOMC rate decision in December. But markets are anticipating this to be Kevin Hassett. Number two reason for expecting a rally in December is that the economy is still healthy. There's still plenty of pent-up demand, and the ISM manufacturing has been below 50 for 3 years. Now that is going to be updated this week for November, and housing has plenty of pent-up demand. Number three, the government shutdown's over. We've had a blackout of economic data, and markets don't like the lack of information. That's going to have a restoration of visibility. Number four, there's performance chasing. Investors are off sides in November because a lot of funds actually threw in the towel. They just thought the markets made the highs for the year. And already 2025 was the worst year for fund managers, with 78% trailing their benchmark through October. Number five, stocks got oversold. And I think especially when you look at RSI. This is daily RSI for the S&P year to date. And the daily RSI fell to 35 in November. That's the most oversold it got since the April tariff lows. And as you can see on this chart, once you made those lows on the RSI in April, market began to rally pretty sharply. And lastly, it's seasonal. December usually finishes strong. And given the pullback in November, I actually think December is shaping up to be a good month. And as far as macro data this week, there's a lot. The ISM manufacturing for November comes out on Monday. On Wednesday, November ISM services. And on Friday, we get a trio of data. But the one the market's probably going to focus on most is core PCE for September. And there are some companies reporting this week that are Granny Shots, CrowdStrike on the large cap side. And there are 5 mid-cap grannies reporting: MongoDB, Pure Storage, UiPath, Donaldson and Company, and Samsara. Most of these are AI-related stocks. And as for individual stock performance, let me just highlight. The top 5 performers for GRNY and GRNY Income were Robinhood, Broadcom, SoFi Technologies, Arista Networks, and Tesla. And these are basically AI-related names. The bottom 5 are Costco, S&P Global, TJX, NVIDIA, and Deere. On the SMID side, the top 5 performers were Lumentum, Riot Platforms, Bloom Energy, IonQ, and SoFi Technologies. And the bottom 5 are East West Bancorp, Weatherford International, Watts Water Technologies, Pegasus Systems, and Qualys. And as far as themes go, I want to highlight the 3 that contributed most to the relative performance. The first are millennials. As you can see, it was a bigger contributor to the SMID-cap portfolio. The second is the global labor shortage and AI-related stocks. And the third are energy and cybersecurity-related names. That's it for now. Thanks for listening, and I'll speak to you soon.
The week of December 1st. From strong ETF performance and accelerating inflows to bullish macro catalysts and oversold technical conditions, Tom makes a compelling case for a strong December rally. Whether you're a trader, long-term investor, or simply tracking the macro landscape, these insights highlight the forces shaping the market as we head into year-end.